Welcome back to Price Action Trading series from Market Secrets. This is episode 23 of the series, and in this episode, we are going to see what are the obstacles to the price action movements. So, let's get started with today's episode. How prices move. Prices do not move in straight lines. So, when we draw the zones, we need to remember this. We would have drawn a demand zone or a supply zone and will be waiting at those zones for taking entries. But there are many obstacles price can come across on its way to our entry. When one of these obstacles is reached, the price usually does not retrace to our entry. That means price may not give us an entry. So we need to understand what these obstacles are and why price stops over there. There are three different types of obstacles that we can have. These are number one, a higher time frame imbalance being in control. Number two, the higher time frame trending trendline confluence can be the reason. And number three, higher time frame sloping 20 EMA confluence might be the reason. So these are the three different obstacles that a price might face before it retraces to our entry. Many times, price will fall short of retracing to our entries due to one of these obstacles. So it is at these three confluences we will be waiting for new imbalance to be formed to continue trading in the same bigger picture direction by taking the counter trend trades. So let's see this in detail with examples. So if you take this example, whenever price touches the higher time zone supply zone, it reacts wildly. So there are two touches here. So if you take the first touch, when the price touched the supply zone in the higher time frame, it reacted wildly in the lower time frame. So you can expect a wild downturn when the price touched the supply zone once again. So it touched the supply zone once again here. So in the lower time frame, you can expect another downtrend and a drop in the price. So what is the takeaway from this particular example? It is simple. Keep an eye on higher time frame chart. Whenever price touches a supply zone or a demand zone in a higher time frame chart, you can expect a wild response in the lower time frame. Likewise, the second example, whenever price touches the trend line in the higher time frame, you can expect strong reactions in the lower time frame. So this is your trend line in the higher time frame. This is exactly the same trend line in your lower time frame. So whenever price hits the trend line in the higher time frame, you can see a steep bounce in your lower time frame. So always keep an eye on trend line in your higher time frame. That's a takeaway from the second example. Likewise, whenever price touches 20 EMA in the higher time frame, you can expect a strong reaction in the lower time frame. So whenever price touches 20 EMA in the higher time frame, you can expect a strong bounce in the lower time frame. This forms example number 3. So these are the three obstacles the price can come across at any point in time. And all these obstacles are due to the higher time frame taking control over the lower time frame. For example, if you look at this chart, the price was dropping heavily. In the lower time frame, it would have definitely formed a supply zone here. But if you blindly trade the supply zone, you will be stopped out because the price had hit the 20 EMA in the higher time frame, so it will start bouncing. So if you take a short position over here, you will definitely be stopped out. So before taking any positions in the lower time frame, please have a look at these three items in your higher time frame. These are whether the higher time zone supply zone is in control, whether the price has touched the trend line in the higher time frame, or whether the price has touched the 20 EMA in the higher time frame. And lastly, a note on counter trend trades. As a beginner, you should not take counter trend trades. You should only be taking the trades in the direction of the clear trend. Focus on clear trending scenarios and great imbalances. I know you will break this rule. Just remember that all the efforts you are spending here is going to be waste when you break the rules and have losses after taking counter trend trades or trades on unclear scenarios. Work on your patience and wait. Otherwise, you will be blowing up your account very fast. Go through this over and over. If you understand the concept so far, you will have a strong foundation to the price action trading strategy. These foundations will help you tremendously in the forthcoming episodes. This, along with the realignment, is one of the most important core concepts that you need to understand. Never forget about them. Do not ignore this concept, and without it, rules will not work. Well, this brings us to the close of today's episode. If you have any queries on this episode, please let us know in the comment section. We'll be happy to answer it. Hit the like button if you've liked this video and share it with your friends if you find it useful. Also, subscribe to our YouTube channel and click the bell icon to get notified whenever we conduct live webinars. Thanks for watching. Have a great day. Goodbye.